Okay. Yeah. So recording in progress. Let's go. All right. So we're gonna go over some great technicals today using the algo and also just reviewing charts. All right. You have any questions? Anytime, please feel free to ask. All right. So I'm bringing up a fresh chart here. Do do do. And we're gonna get it all loaded up. I thought. Boop, boop. All right. Y'all already know what the squeeze and swing look like, but right now we just need this algo. I'm gonna add it too, and then I was gonna hide it. Typically going over some straight price action. So I'm gonna be going over different price actions, techniques, and information you want to pay attention to, especially you have the algo that's built into it. If you pay attention to those, it can be a big game changer for you and probably help save you some money. All right. So I'm gonna try to specialize or focus on identifying a trend, trading with that trend, and just going at it like that. But first thing first, gotta do a couple of cosmetic things to this. Just make it look the way I like. Real quick. So you notice the colors of it, right? This is the different colors. You can change it, make it look whichever way you want. I prefer blue scale. That's one of my favorites. That's what I like to do with my squeeze. Right. I like to set it up like this, use a hall 20, put on my divergences, make sure I get those on, stuff like that. Boom. Got it on, get that out. Let's get into the algo, right? So we're gonna clean stuff up. Let's get rid of the background clouds, and then you already know blue scale on this, that, and then on top of that, cut out plot candles because I use hollow candles. That's my personal preference. All right, so we're focusing on market structure, which is here. All right, see this. Got just this is your swing and this is your internal, right? So you got internal market structure, you got external market structure. Very important information to take in on, right? This is gonna look like your BOS, break a structure, CHOCH, change a character, change a structure. You know, that's what these are built into the algo to show you, right? And the difference will help you stay out of a lot of trouble. And also, it will help you stay ahead of the game too. So here, you see the market was shifting downwards right here at this moment. We had a nice little downshift into the market. And after that, once everything shifted, started shifting down, that's when you say, hey, we kept getting another change of character, break of structure, another break of structure. Then all of a sudden it went off on this crazy tangent. Just boom. It did this move. Thing about it is, it actually stopped after a while because it had a reason. So once you had this shift down, it took this low, which is market liquidity, shift down to do what? Rebalance price in this fair value gap right over. So I'm gonna highlight that for y'all real quick. Boom. Then let me zoom in for the ones in the back you can see. There we go. So if you notice, this is your fair value gap. That was their target, right? Price They force price down, send price into a bearish model, force down, force down, force down. Boom. Once they hit, price went off. This was the results of that. By understanding you had this target on the table from May 25th, that's what's their target that they hit in October, right? So just looking at your market, going back, identifying candles like that, understanding what the market is showing you. Then once you had your change of character, that's already telling you like, hey, we're no longer bearish. We had an internal change of character. Then we had external because that's the last swing high here. All right. So it's your last swing high. Label that SH. Last swing high. There you go. So once they took this high out, that's when price starts shifting up. And that's also how you knew, hey, we are no longer bearish because they should never took this high. They displaced price with the internal, then they went for the external and kept on going. Everything happened for what? Everything has a target. Everything happened for a reason. It's a will, it's a way. They will run them numbers. Okay, so don't ever get surprised about situations like this. You say, "Oh man, it's been going down, down, down." But if that said be the case, you do not want to get caught up in those sad things. You want to give yourself some breathing room to be able to see the move, see the target that they are looking for. If you haven't got this move, well, look for the reaction. If everybody's going one way, you got to start looking to go the other way. Figure out where they're going and why they're going there. And then you simply leverage and position yourself properly. Okay, that's it. You see the target, see where they're going, identify the target, boom, take action once it hit the target. It's aggression. So a lot of times when you see stuff like this happen, you see price start reversing at any moment. So let's say you're watching it on that October, right? And you see it starting to come up. Okay, great. But you're not sure why it's doing it, and you know it's been very bearish. Just take your time out, right? Let's remove the box real quick. Take your time. Put a horizontal line right here to say, all right, man, this is what price is currently did that. Give me a little horizontal line there. Apparently some type of support or something. Then trace it back to where it lines up at. It lines up with the candle. Identify your candle. Once you identify the candle, it can be a fair value gap or order block, anything of the sort, right? Figure out why they did that, and then you can say, okay, if they don't come back for this low, let me see what happens when they get to this high. Okay, if they don't turn around, they're gonna keep running. All right, let me see what they get to this high. You don't have to take action right away if you are late to the party. Let it accumulate, give yourself a minute, and wait. Let your oscillators catch up. Let your EMAs catch up, whatever you're using, right? We got built-in EMAs. So if you don't have a set, we got some built into the algo. You know, clouds, these are 4, you got 512, 3450 built into the algo, right? So from there, as you seen, once price hit, reject it, you got your crossover here. Okay. And then price starts shifting up. You had a spread of the movement averages, and that was the smooth ride up. Came back for support and kept going, right? At any moment, we say like, hey, well, that's cool and all. How could I get in on this? Right? I want this action. One, you got breakout traders that take the breakout of the last swing high. So you got to test, you got to break and retest, right? So they hit, consolidated, came down, retest this level. There. That's your retest of the overall downtrend, right? And then they went off. So it's multiple legs to this. A gap here. Okay, great. They didn't even entertain the idea of the gap. It's a 4-hour chart, by the way, too. They didn't even entertain the gap. They just tapped their toe in and kept on running. So you want to pay attention to your signals, your crossovers, you have any. You want to pay attention to how the market is moving. You also want to see like, hey, am I overextended from said EMA or said moving average, right? So let me add some regular moving averages because I know everybody don't use the cloud. So quick. We'll add some numbers here. 20. We got a 200. And we'll do a 5. Yeah, do a 5. All right. Turn this one white. Yellow. Turn 200 purple. Keep it simple, right? All right, cool. So by watching this market, you've seen price shifting down, right? Just had a crossover to 20, but you see what's happening with the yellow line. That's your 20, right? Your 20 moving average. Now, price is getting kind of overextended. It's getting very vertical, right? And it just dropping at a rapid pace. What happening is if you're looking at it, your 20 EMA is not following price. It is starting to halt, right? It's starting to halt, starting to curl. When that happens, guess what? And you're approaching the reversal zone, 9 out of 10, price is trying to flip. Especially at your fast moving average, it caught price and start scooping it outwards. Got to cross over here. Murder she wrote. Okay. And the fact it was also very close to 200. That's a magnet for price action, especially trading. This is the QQQ, NASDAQ top MSCI, right? They love to make this market go up. Depends on how Apple, Microsoft, Tesla, Amazon is performing. That also is a telltale time to kind of let you know what 9 out of 10 going to happen with this market. Learn your correlating commodities that correlates with whatever you're trading. So you're trading gold, economical news, US dollar, things like that will be a telltale sign of what it should and should not do. But also just read the chart, right? Be very conscious about reading the chart. All right. From there, you see we had the nice little shift up in rain. Let's say you come back the next day because this is over a certain amount of periods of time, right? You had the crossover, cool. This happened on the first, right? Right. So you coming in on the second, now you got your buy signal. Okay, now let's look at some oscillators, right? Now all the oscillators are turning up, you're getting ready to go. By this point, now my swing is in a bullish position. Look at your oscillators. You can add a MACD. It also give you it would also help you out with more confirmation, let you know like, hey, is it bullish or bearish, right? Let's add a MACD. Oh, we do that. And then I got to input my numbers. So even when it hit, right, your MACD was already starting to turn up. Now, once it got in the bullish territory with force, you see how they separating? Once it got in that bullish territory, they're letting you know, like, hey, it's running, it's about to get up and go. That's not the confluence. Trade with the direction of the moving averages. All right. So let's say we drop down to a lower time frame because now moving averages is in full confluence. We got a bullish crossover. Moving averages in the bullish side of the market, right? Now, what I want to do is, I want to drop down to a 1 hour chart because I'm looking at the 4 hour chart for confluence and all of that. But same time, I need entries, right? Next day, I'm also looking for, hey, do I still have the same setup on a 1 hour? Looking at it, moving averages crossed up way back here, right? All right, moving averages crossed up way back here. Price is running. Okay, cool. So we had the same type setup, right? You had your internal break. Cool. But you want to get more pinpoint with this, you can go down to the lower time frame, 15-minute, anything of that sort, because your 4 hour and 1 hour is in the same direction. It's very important to make sure your 4 hour and 1 hour is doing the exact same thing. That will give you a stronger trend base. If it's not, you're trading into resistance. Okay. So always remember that. If they do not agree, you're trading into resistance. So remember, that's where we had our horizontal line at. Then also where price is trying to cap out. So price is hitting an extreme and needed a pullback. So you simply just wait. You get a sell signal. Sell signal is short-lived because the market is bullish, but this just letting you know, like, hey, I'm coming down, right? To rebalance price, take a break, and I'm going out. Where did price come back down into? Little gap right here. Boom. Just like that. Very simple, right? Identifying those in your trend. You wait for it. You see a gap, let the market do what it need to do. You trade those accordingly. All right. You ain't trying to be a superhero now. You just saying, hey, I'm gonna be patient. I'm gonna wait for the market, let it do what it need to do. Right? Give you an opportunity right here. Once the market came back into that fair value gap to rebalance on the 1 hour, you say, okay, great. It's trading down into it. Typically, what you want to do is, I want to trade these something. It's a bullish gap. I only want to enter a top per se, or I got another little secret how I do it. Once you know, I'll run it on the fields, but for time's sake, you want to be at the bottom of this candle. That's your stop loss. You're at the top of it. Now, as you're trading down, especially trading options, right? You're trading against the scalpers, the short-term traders. There's a lot of people in here for a good time, not a long time, right? So their idea is, hey, I can trade it down for a couple of points and then I'll be good. But in reality, all they really doing is giving money to the market because most people are generally greedy. They don't really have a legit exit strategy, or they don't really just have an idea of a good target. If they wait and say, oh man, it's going down, like, oh, let me hurry and get out because they got in too late on this push up, or they didn't get let it come to support, they'll jump in, cut their position, then get into some short positions. Then they'll drive price down, not knowing what's to the left of them. Then the moment they see the trouble, they cut, price flips and run. But you already being patient, you already seen what's happening. You mark your chart up, you done your technical analysis. You're waiting for price to come down. The moment price hit this box, you like, bet. I'm gonna go ahead and get in, let it do what it need to do, let it play out. My stop loss at the last low here. I have nothing to worry about, right? At the low of this candle, boom. If they take it, great. Trade over. but I'm not risking much, right? Stop loss $1.40. That ain't nothing, right? And you're just gonna be trend. And you're great. Simple as that. What's going on? Trade. If you want, you can set alerts on the sell signals. The sell and buy signals, you can set alerts on them. So when the price came down, remember, let's get rid of this box. No follow through, right? The boy Oliver Last like to say. Engulfing candle, no follow through. That's the end of a trend. The fact that this large candle had zero follow through means it's over. The moment that thing went down and started retracing, that's another entry you could have took. If you don't want to take this one, you can wait till it started going down, and the moment start pulling back, oh yeah, take them. Take them from everything they were, because you already know what's about to happen. You heard him that put, they're gonna be overjuiced. The calls gonna be cheap. Nobody in there. The implied volatility is low. This on any market too. We're gonna go check out futures chart, some futures charts too as well. But the contract's gonna be very cheap because nobody gonna be really thinking like, hey, it's gonna go up. Most people believe it's generally gonna go down, and the traders who knows, they load the boat at one time so they can get a cheap contract with low volatility, and then once everybody else believe in it, they going along for the ride. They start taking profit. When you start getting these small candles right here, right? That's them taking profits. They exiting. Now, some people are swinging this, but other people say, hey, that was a great day. I'm good. I got what I want. I'm leaving, right? That's what you got to pay attention to. You start doing all that, then also look, you know, change your character, right? Because they left some stuff behind. You had a volume imbalance. You had to come back and get that. Price wasn't properly balanced. Down. Oh, and up, right? So just for sake, I hope y'all can see it. Mm-hmm. There's your volume imbalance. Price did not balance correctly. It did not fill in this candle correctly. See how it kind of like just straight gapped up because the candle opened here. It's wicked down and came back. That creates a volume imbalance. Price will also retrace back into these, right? So anytime you get in sporadic price action like this, people know like, hey, you're gonna drop. I'm gonna drop down and come get that. I don't want to be in this position because I don't want to give up profits. So they'll let it do what it do. Once again, you have to change your character. This the fake out, right? This inducement that can get you to believe, hey, they actually going short. They took out the last swing low. Yeah, right. Oh man, it's a break of structure, man. That's like people think. Okay, it's ill swing low. Y'all know that. So the moment they took that out, and you seen an engulfing candle, right? And you jump in on it. Now here's your problem. What happened? No follow through. Same thing here, right? No follow through. No follow through. Price went off. You got a boosty candle right here. Caution candle indicator, right? Boom! Price went off. It's still really moving there. So you need. Price went off. You pay attention to those key things, and it will help you stay out of the traps. Identify what's going on with price. Take your time. Don't take anything that's being presented to you. Because if somebody's handing you stuff, it's not a good look. All right? It's not. If you don't have a plan, somebody have a plan for you, and then it's not much. So just be wise about that. See what's happening, plan it out, stalk it out, say, hey, overall on 4 hour, the market is bullish. I'm gonna stay in a bullish position. I'm not gonna take the sell. I'm gonna wait until it finds the level of support it needs. I'm gonna get in there and then I'm gonna take the trade up. Very, very important. Okay, so that's the QQQ. All right, before I get off this chart, anybody have any questions?
What EMAs do you use, Nia?
All right, yeah, it kind of like varies, right? But if I'm just looking for a quick scalp, I do a 5, 13, 200, right? But if I really want to trade the trend, I have a certain setup, a 20 high low setup, and then I trade that with price action.
All right, cool. Thanks, man.
Bro. But remember, certain moving averages you want to use to for different reasons, right? So you're a swing trader, you want to give yourself a little more time, so you don't want to be too fast with your moving averages. You're a scalper, then you want those fast moving averages. So you're a day trader, just got to use it in certain key ways. Makes sense.
All right, so if you were swing trading,
Mm-hmm.
what EMAs would you use?
Oh, so from there, I wouldn't be looking at no 5 or 13. I'll be looking at 21, 55, 200. I'm gonna be looking for crossovers like that on higher time frames, or at least a 21 price being above a 21. You can do a 21.34 cross, 21.55 cross, right? I want price to be crossed up on those moving averages on higher time frames to give me a nice strong trend, right? Because the higher the higher the number the crossover is, the stronger it is. A
Uh-huh.
5 can be easily broken, right? A 5 moving average of 6, 7, or 8 can easily be broken, right? But when you start getting up to the 21s, the 34s, the 50s, 55s, those are stronger crossovers, so they last longer.
Thanks.
No problem. But also mind your time frames too. You start entering into swing trades at the 1 hour and above. Anything lower than that is not a swing trade. So you're looking at a 15-minute chart saying you're going to swing a trade overnight. That is a bad idea because you don't have enough data to support that trend. You know what I'm saying?
Got you.
Okay, cool. What? Any other questions?
So just for clarification, those boxes that you drew once you saw the third touch, correct?
So these boxes, I would draw on certain key candles where I know, like, hey, what price should be able to come to, right? Right now we back testing, so price is already there. So future sake, just like I put this gap here, I know price gonna come back into this gap. So each box represents something else or a certain type of candle. So this is your this is your volume imbalance. This is a fair value gap. Then you also have order blocks. So I have boxes I draw for order blocks, supply and demand zones. I'm saying. But those let me know price will return back to this at some time and place. Well, I know the place, I just don't know what time they're gonna return. So I'd rather have it there and be ready for it than don't have it, and then when you get there, I don't know what's going on. Makes sense.
Yeah, I got you.
Yeah. So that's like one of those things you get up, do on the weekends, post market, just come in, identify price right now. Okay, cool. So this is the current price from this week price action, right? So what I do, same thing when I'm doing my technicals, right? I'm doing market analysis. Okay, I got a gap to the upside. Great. Now what else do I have here? Right. That's cool. That's a little imbalance right there. So they're probably gonna come into that. I'm looking at the candles. It's kind of like watching them. I definitely know they're gonna want this gap sometime in place. So from there, I'm gonna drop down to a lower time frame, see what's inside the candles that can probably also key out too. So we have a small minor gap right here on 12 minute. Okay. Highlight that. Then right here, boom, we have pair orders. Nice little rejection block. I like this setup. So I know for sure we get a pair of orders like this, price going up, equal order, boom, count take it out. So now this is a zone of resistance. So even if they come back, they already been here once. So if they come back again, they fill this gap, they come up and they key off of this, great. I know I can start selling off. If not, I'm like, well, if they pass that up, they're gonna probably want to come up here and get some of this. Now, what is they gonna key off of? I have another order block right here. So this is if then what? So this is my 3 candlestick order block right here. So I'm mark that up. Price is consolidated there before, so that is a consolidation zone. So if they take this and reject, I can take shorts. If not, I'm gonna wait. They blow past because I know they got another gap here, so I'm not gonna load the vote. I'll put out a testing contract. If they go past the zone, cut it, then wait for them to get up here and take this gap, and then see if they'll key off of this block and they'll start heading down again. So that's all you do. I got that. That's yes.
Yeah, I got it.
Right, cool. Smooth. Right. Yeah. So let's go. So everybody. Let's future. Mm-hmm. Let's go talk about gold. So I was looking at gold. I was telling somebody else this. Right. So that's what I mean about something being overextended too. It's overnight. Boop, boop, boop. Gold been dropping. Took the low. Taking that is low. That should put it there. All right. So once we took that low out, I'm like, hey, this thing being very vertical. Like this morning got to the market, it was super vertical. I didn't like how far it was overextended. I said, man, they're gonna have to come back and retest something. Is that a 200? Come back. Went to the 1 hour. Big game on it. I said, okay, cool. Once again, it's kind of far overextended. Ain't been back to the 20 in a while. Been a lot of candles since it came back and touched this 20. I think gonna come back. So even though it looks good, you're moving average to say, hey, XYZ, you still price spin was overextended. So trying to get this, and then you had news coming up, 910 price gonna pop on you, right? So look what happened. Price got here, spread consolidated. Now we gotta ask ourselves why. So scroll over to left. What do we have? Boom. Got order blocks, supply and demand zones all day long. Right? So this is one that they was keying off of. They was violating because they also had all this little supply down here, right? Oh, like his supply. I was talking this out last night. Let's go back over here. As you see, they was reacting here heavily. Then they like, okay, we done with this one, but we got one more down here. Now you're gonna say, what's the difference, right? When you get an accumulation of orders, so you had orders come in, accumulate, then come right back out, strong rejection, right? So you pay attention to those. Like, hey, if everybody stopped here, consolidated, and they come out, well, 9, 10, they're gonna come back again. That's when you start entering into supply and demand. So you have this is the order block, this is supply and demand zone, right? Same purpose, number of places support and resistance is to keep it simple, right? I have to get off into it, right? But I like to keep it simple, and just keep saying, hey, OBs, everything's all block. That's how I like to keep it simple. I don't like to get all crazy with terms and stuff like that. But if you see a lot of orders being accumulated with price action, prices stay in one spot, and then when it leaves at a crazy rate. 9 out of 10, price gonna return back to those spots and hit and react. Same thing here, right? So you had all these little crazy orders. Boom, price came back, struggled for a minute, then push it down. But everybody know gold is very bullish. Everybody like good safe haven. So they're gonna want to sit in gold. They're gonna want to hang out. They do. But when you're trading and you're looking for confluence, you must look for your signals. You see it's trading down. Okay, great. 4 hour looking good. 1 hour looking good. Then you go down to your 12-minute or 15-minute, whatever chart you like to use. Look for the same confluence. Say, okay, cool, it's pumping down. But in this said case, if you was back here, you had a great time trading this down. But once you get down here in New York coming around, you don't want to keep trying to trade this down because you can get hit with stuff like candles like this at any moment, or you get stuck in consolidation like this at any moment. At any moment that can happen. You get what I'm saying? So you never want to get trapped in those things. So this order block played out, right? It served its purpose, right? There's another one. Right? So, like I said, 2 candlesticks, order parent, turns to a rejection block. You had an order block right here. It's keying off that. Then you have another one, then you have another one. They're going to rebalance all this price at some time throughout the day, throughout the night, throughout the session. They're going to want to rebalance price. So they're going to go back and hit these little zones. We're going to wear them out, especially on higher time frames. We go down the time frames, we can start pinpointing exactly what is discounted, why it behaved the way it did. But for the moment, like, hey, paired orders, they got here and they fought for their life. They said, hey, we really want to drop this. We really don't want you to have this thing go up no higher. We want to take it here, let y'all reset, and we want to drop it to the dirt. So these like little zones you want to keep in mind. Pay attention to those, right? Trade them accordingly. Oh, that's no fuss. So let's see what else we got here. Let's go over to crude oil. Everybody. Oh, go to the 4 hour. Mm-hmm. So same thing with them. They were trading down, like I told you, very vertical. It wasn't trading down like this in an angle, having this little pullbacks. It was a very vertical pullback. Well, drop per se, then they had a very vertical pullback. So as it's doing these said actions, I already knew like, hey, it's gonna go into a buy setup. They're gonna try to pull back. At the moment, I seen it. I'm like, I love to trade this bad boy, but I'm looking how it's looking. Kind of weak candles, right? No follow through. I said I don't want no part to that crap. And then I'm like, okay, let me go down to the 1 hour this morning. So I'm right here. I already seen the market is turning up, coming to rebalance this fair value gap right here, right? Because exactly what they're doing. I don't want no parts of this because it's a counter trend trade. I don't want to trade a counter trend, so I'm letting it do what it do. So as it's pulling back up, I'm gonna say, okay, cool. You're rebalancing. You're trading back up into resistance. My 4 hour, 1 hour is not in confluence, so I'm not gonna take a trade that's not in confluence because you're gonna have more resistance than you do anything, right? You don't want to trade into resistance. You want to trade with the trend. Overall trend is bearish for the moment until the 4 hour get in line with the 1 hour. Technically, it's bearish. So I want to pay attention to that, and I don't want to trade against it because that's the fastest way to lose money, right? So yes, it went up. Cool. Who cares? My job is to trade with the trend. It's a market that's always trending somewhere. Let's go find it. Use your setup. Identify which market is in confluence of a trend. Preferably after you do your top-down analysis. Always do your top-down analysis. Look at your 4 hour, 1 hour. Make sure they in the same direction. Great. With your trading options, look at your daily, drop down to your 1 hour. Make sure those are going in the same direction that you want. You can wait for the sell signal. If it's going up, okay, cool. I need to see when the last time it compound support. If it just came off support, I can take this trade. If it haven't been on support in a while, then you don't take the trade. Same thing here. It haven't been let me see. It haven't came back and retested resistance in a while. So guess what they're gonna want to do? They're gonna put in a buy signal, pull it back, let it come find resistance, and then from there, that's when they're gonna want to drop. Once they go back, rebalance price, stuff they left behind, take care of that said actions, then they're gonna go ahead and do what they do. So those are key things you always want to keep in mind. You cannot go wrong by trading with the trend. You can see that the trade is way longer, moves are way stronger, and you can leverage way more by trading the trend. Don't trade against the trend, please. All right. You only got to really look at 3 time frames. You can look at your daily, 4 hour, 1 hour. If they go in the same direction, you have a trade. If they're not in agreement, you don't have a trade. Or if you're going to trade it anyway, scalp it. Don't fall asleep on it. Take the in and out positions. Once you hit resistance, understand that. Or if the trade start going against you, say, hey, 9 out of 10 is bearish, and those pullbacks can be very deadly. So I don't want to trade that. I want to wait until we get in trend. Let them have their fun, and you sit out. Go find something else to trade. It's totally fine. Your little top 5 list, trade that. This new year, so I want to see more discipline by sitting out of some markets. See, it's not behaving correctly. Sit out, formulate your plan. I'm sure you have time to develop these things. See where they sending price to. Say, okay, cool. Once they get there, what's the buyable option here, right? So let's say you're just getting started. Are you up at 6 a.m.? No. You up at 7 a.m.? Maybe. You up at 8 a.m.? I'm sure you should be, right? But at this moment, support is way down here, right? Cool. So your support way down there. I don't want to get my stop loss got to be at support, right? I don't want to have to sacrifice all this money just to trade if I'm just getting to the market 8, 9 o'clock and I'm way far away from support. On the lower time frame, you say, well, let's get moving. So you say on the lower time frame, you say, hey, I can give it the candle, but sometimes you actually got to give your stop loss and market structure so you can have a proper stop loss, so you don't have to worry about getting stopped out so quickly, right? But if you're way up here, your stop way down there, you're just increasing your risk knowing that the 4 hour is still bearish. It's just trying to find resistance. You don't know how high it's really going to go, right? So you don't want to trade something that you know for sure once you get to where it's going to go, it's going to dump. That's what happens a lot. Even if it don't, the probability is high, right? So you don't want to play those type of games. Be patient, sit out, or you take it and listen, I'm giving to the bottom of that candle. I'm not giving nothing more than that, right? I'm not going to move my stop. I'm not going to double down because I'm overall wrong by counter trend trading. Take your wins, take your losses, get out the way. You ain't always going to be right. You ain't going to always be wrong. But by being diligent and, looking for our key setups, we can really help ourselves in minimizing our losses, minimizing the incorrect trends, minimize the bad trades, minimize unnecessary stops. You can also get proper stop losses for cheaper. That's another great benefit of doing this action. So those key things. Got 10 minutes to go. Anybody have any questions? Some questions in, make sure.
Neo, real quick. So looking at
Sir.
the 4 hour and a 1 hour,
Mhm.
it looks like it's a downtrend. But how far am I looking back on the 1 hour to catch a trend? Or do you see what I'm saying? Because like right now, the last buy signal, I can say it's on an uptrend.
Yeah.
But looking at like going further back, it seems okay, no, we're actually on a downtrend. So is
Yes.
that where I'm using my EMAs 200 and to see, okay, basically I'm still in the downtrend then?
Yes. And like just because you get a buy signal on a 1 hour doesn't mean the actual true buy. Just letting you know, like, hey, it's pulling back. You know what I'm saying? So if your overall higher time frame trend is in a sell, and then you get a buy signal on a lower time frame, that's an opportunity to get back in the sales. You're just gonna let it finish.
I got you.
Yeah. So you notice you've been trading for a while, right? We all done the counter trend trade, and it's always one hell of a ride for it trying to get to where it need to go. Sometimes it do it smoothly, sometimes it's a fight, but we never know when they want to pivot, right? But the thing is, you can easily let price do what it want to do. Like, hey, that buy signaling, okay, great. But the overall trend is down into the 4 hour getting agreement. You don't have to look back far. You really just want to see, like, all right, what's the current trend that's in that little small window? If we gonna be doing day trading, I don't have to have all this way back information. I just need to know where price is gonna go and where they're gonna take it to next. So if it bounce here, where they gonna take it to? This is a target, right? This whole thing right here is a target.
I see. Right.
You know what I'm saying? Targets. Previous price action is your targets, right? If they break that, it's a new target. You just go back, identify your targets in the trend. As long as you're higher time frame, let's go back to the 4 hour, right? Remember, it's still got to take this high out for me to say, hey, technically still a downtrend. It's nothing but a lower high for the moment. You know this. Till it can take this high out, that's still a lower high. Lower low, lower high. Till they take that out, lower high. Right? From there, if I come moving average zone, right? We still below a 200. Anything below a 200 is bear.
Yeah.
Even though we got a quick little cross up, but still they dragging it where? To resistance.
Right back to the 200.
Exactly. But for the moment, if I say, all right, cool, my 4 hour, 1 hour, but also look at my oscillators, right? They below my zero levels. They in bearish territory. They're trying to force them up until they get in the bullish territory. If they in the bullish territory by tomorrow and they get over that 200, great. I'd probably trade it up a little bit higher. Probably get into this higher zone up here, right? Trying to take it up to 75, 76, something like that. No. But if they still in bearish territory and they coming up to resistance, smack, it's going down. Prime example, look at this right here. See, right here, it's always a fun thing to do. Let's put this. So price is trading up, as you see. And price dropped off. You'll be like, man, that thing was a nice little uptrend. On the 4 hour, we had the crossover, whoop, right? But look at it. Your oscillator is still in bearish territory. Even though it was approaching this, the momentum leaving out your MACD, swing in the zero or below the zero, squeeze ain't looking worth for nothing, right? It's looking real poor and skinny. Then boom, the moment it hit a spot of resistance, one pothole, blow the tire, game over, and they drop. That's why you don't want to trade the counter trend. Yes, it went up very nicely, but at the end of the day, when it got here, you fell asleep at the wheel. Look what could have happened to you. It's a lot of markets you can trade. You have to play that game with yourself.
Man, I appreciate that, bro. Thank you.
No problem at all. Yeah, this is like little details. Appreciate that, JC. What are you doing? Yeah, so little details like this is watching your position of your oscillators when you get up to resistance or support is a telltale sign of what's going to happen. We go down to lower time frames. This MACD is guaranteed in a bullish position. It's going to drop down to the 1 hour. Boom. See? It was on the bull side of the market, right? But your regular bearish diversions popped up and put them in the coffin. At the end of the day, it's going to trick you. That's why it's very important to go look at your higher time frames. The moment you go look at, they say, "Hey, my oscillator's still in the bearish position. Yes, we're going up, but the 1 hour is not going to dictate the 4 hour. The 1 hour it can lead the way, help pull the 4 hour up to resistance. But at the end of the day, I still have to be leery because I don't have full confluence. My oscillator is not in the proper position. Price is still going down. I don't want to play myself like that. So I'm going to be a little patient and look for the reversal. If everybody thinking diamond hands to the moon, I need to say when they're going to crash the ship at. When they're going to break those fake diamonds. When they're going to crack their glass on, right? So that's what you got to look for. Don't try to join in on the festivities. Look for the reversal. See what nobody else sees. Okay. So any last minute questions?
How do you turn on the Hall on the squeeze?
Squeeze?
You showed me that in the summer, right? My setting got deleted.
Go to settings, scroll all the way down to the bottom. See what it says.
Settings. All right. Yep, to the bottom.
Yeah, make sure you check the box main trend MA.
Main trend MA. 1 second.
No problem.
Wait a minute. Settings. I don't see that. Wait a minute.
You in the settings of the squeeze?
Oh no. I was looking at the overall settings. My bad.
Yeah.
All right. Settings. What'd you say from there?
All right, scroll down to you see main trend MA.
All right. Got you. And then from there,
once you get that check, hit that little drop down box and scroll to see Hall.
Oh man, yep. Got it. Thank you.
No problem. And H-Law, it's always been 7 p.m. Eastern Standard Time. I ain't been on 7 p.m. Unless you're on a different coast. Nah. Yeah, but don't worry. If y'all haven't been around, I have other recordings inside the resource channels. Go check out the resource channels. I have other recordings of other Wednesday classes that was done. And also a couple other coaches, they put their classes in the resource channels as well. So there's a lot of free videos up there. Y'all take your time out and go review those videos. Brush up on some stuff about a good game.
Hey Neo, can I ask a question real quick?
Yes.
I'm brand new, man. I'm still trying to pick up all of this jargon and terminology. But what was that setting you just did? What was that for?
Oh, for the squeeze. So what that is, let me maximize. So you see this little green and red line right here?
Yeah.
All right. It helps read the momentum shift in the market, right? So as things shifting, it will tell me like, hey, price is creating a gap here, it's going to shift up. Or when things are shifting down, it's going to create a gap here. The whole moving average is faster than an EMA, right? And what happens when you have it on a chart, it will engulf price. And once it starts engulfing price, that's signaling a reversal. It does the same effect here on the oscillators as well. So once the oscillators start being engulfed by the Hall, that signals reversals. That's what happens.
And so
Neil,
Uh, yeah, y'all speaking at the same time.
sorry.
I know
Go ahead,
that's why.
Fred.
No, I just wanted to. So the setting that you just check the box under the squeeze.
Yes. So all I do is go to settings, scroll down, check this box right here, main trend MA. I hit that tab and then hit all MA. Then I set it to 20. The key is setting it to 20. That's the magic number. It's 20.
Period is 20.
Yes.
Okay, got you. All right, thank you. You can answer the other young ladies.
Okay, no problem.
So my question was on that same one, what is the H and the R? What does that signify again, please?
Oh, the H and the R. All right, so those are the divergences. The H is a hidden divergence. The R is a regular divergence, right? Those H stand for continuation of trend. The R is reversal of trend.
Got it.
Okay. Red is bearish, green is bullish.
Okay.
Okay.
All right. Thank you.
No problem at all. And if anybody need the algo, I just put the link in this chat right here. Y'all can click that and get that. It's FY. Y'all don't have the algo, you can get that link right there. They should do a trial that you hit it if it's still available. But yeah, all right. Any more questions? Appreciate it.
Coach Neo, help. They took the slide cheese off my bun. It's sliding.
Oh man, don't worry. You go get my mask. You're gonna get them. Gonna get the cheese back. What up, Roach?
Coolin', man. Yo, good stuff, bro. I didn't know you was on this crypto side too.
Oh man, I do all that. I do.
Man, right. That's why I'm peeping.
Yeah, now crypto, forex, futures, options, stocks. The information is available. We got an amazing community of well knowledgeable individuals. So I try to hit it all. It costs you little to no effort, especially you into buying and holding. I pick my commodities I choose, or I pick my market I choose to trade in and out of, but the other ones like, hey, I'm buying and holding. Yeah.
Right. It makes sense. Hey, once it's a chart, you can read it.
You God dang on Skippy. Dang Skippy. Yeah. Bada boom, baby. But yeah, the little wins. This is the sauce factor, baby. Welcome to the sauce factor. You're gonna leave with something.
That's right.
Yeah. No, you don't come to the sauce factor often, but you're gonna leave with some sauce, baby. Yeah. So I do this class every Wednesday at 7 p.m. Eastern, unless I'm on vacation or I'm preoccupied. But this is Wednesdays. I try to start recording more often. I used to didn't record these classes, but I know a lot of people missing. They keep asking, so I'm trying to make sure I record them every Wednesday. If I forget a Wednesday, forgive me. But I'm trying to make sure I get them recorded every Wednesday, so it'll be available to the community. This is going to be recorded to my laptop, so just give me a minute. I can get it uploaded later on when it's done rendering. All right. So on that note, if y'all have any more questions, or are you still letting the questions marinate on you, hit me in a DM, reach out. I will gladly answer any questions. All right. My handle is Thanks Neo on all platforms, so I'm not hard to find whatsoever. It's Thanks Neo, one word, all right? It's across any platform. Look for me on any platform, just type in Thanks Neo. Boom, I'm there. That's it. All right, so yeah. I'll say smooth. We lit out here. Yeah.
All right, brother. Later, man. Great stuff.
All right, thanks a lot,